Good evening, good afternoon, or good morning, depending on where you are on the globe. Welcome to today's E-Axis webinar. This webinar is the last of our webinar series on climate change mitigation policies and international agreements. As you probably are all aware, the transition to a low carbon economy is a global effort, and it can only be achieved if all policies, fiscal policy, trade policy, or financial policies do align on this objective. And in this context, international cooperation is necessary sooner than later to deliver early and smooth transition within the next decade. So in the two previous webinars on this issue, we had Silvana Tenreiro presenting how international agreement actually led to significant reduction in emission. And in the second seminar, we had Aro van Esselt and Peter Newell discussing the merits and challenges of two possible pathways to international cooperation, the creation of climate clubs and the traditional multilateral agreement. Now, with this panel, we turn to another aspect of international cooperation, which is the possible role of central bank in it. So this is a policy panel where we discuss this question with three panelists, and basically what we will address in this webinar is what specific role can central bank and supervisor play in supporting international cooperation initiative. Is there a need for central banks to coordinate among themselves on climate and environmental issue? What should be the role of international forums like IMF, the BIS, or the FSB on climate and environmental issue? And basically also which kind of cooperation between central bank in advanced and emerging economy is possible or warranted. So to discuss this question, I'm thrilled to welcome three experts on these issues. First, Isabela Ribeiro Damaso. Isabela is currently the head of Department Sustainability and International Portfolio Investors at the Banco Central do Brasil. She has led the Banco Central do Brasil risk management team for more than 20 years, and where she was responsible for the development and implementation of the International Reserve Risk Management Framework and the strategic asset allocation. So Isabela will certainly present the view from the angle of a large emerging economy in international cooperation. Welcome, Isabela.
Thank you very much, Pierre.
We also have Jean Boissinot, who is head of the Secretariat of the Network for Greening the Financial System, the NGFS. He has previously held various financial stability-related positions at the Banque de France or at the Treasury in France. And over the past decade, he has been involved in green finance in France or globally, including as a COP21 presidency policy level. I think at the head of the NGFS, Jean is in an ideal place to present us the cooperation of central banks at the international level. Welcome to you, Jean, as well.
Thank you.
And then finally, we have James Edmonds, who is a researcher at the Joint Global Change Research Institute, a collaboration between the Pacific Northwest National Laboratory, where he's a chief scientist and Battelle fellow, and at the University of Maryland in College Park, where he is a College Park professor in public policy. James is one of the pioneers in the field of integrated assessment modeling of global change. His most recent work focuses on international emission, trading scenarios, and climate finance risk. James, your CV is much longer than that. I hope that you I can keep it short. Before turning to the panel, let me just remind the audience that you can ask all the questions you want in the Q&A application before, and I will relay them to the panelists. But we will start with a round of introductory remarks, and let me start with you, James. Before turning to central banks more particularly, can you present us somewhat the big picture on international cooperation and the cooperation needed to achieve the transition to a low carbon economy.
Great, thank you very much. And it's great to see the NGFS being represented here. This is a place where actually some of my work, my recent work has been focused, the global change analysis model being one of the 3 integrated assessment models that are used to produce scenarios for the NGFS. But I want to start off at a very high level and just remind us of the goal of the Paris Agreement of 2015, which I'm sure we're all well aware of, that the countries of the world agreed to seek to have the global average surface temperature well below 2 degrees and to limit the temperature increase to 1.5 above pre-industrial levels. That's incredibly daunting. Basically means remaking the global energy system by 2050, transforming it from one that's primarily dependent on fossil fuels to a non-emitting version. And that in turn means massive increases in energy efficiency, decarbonization of the power system, substituting wind and solar, bioenergy, and putting CO2 capture and storage devices on retrofit fossil fuel technologies and on any new systems that are built, potentially deploying bioenergy with CO2 capture and storage, electrifying the transport sector, or introducing biofuels to substitute for fossil fuels, taking the industrial sector with its many heterogeneous energy uses, and again, deploying CO2 capture, potentially bioenergy with CO2 capture, hydrogen, and then I think the technology that's so often left off the table, but is incredibly important, and that is continuing the improvement of crop yields around the world to allow for afforestation and the end of deforestation. And so by 2050, that's an incredibly daunting task. That means international cooperation. That's not going to be done by parties independently. If you look at all of the models that achieve the Paris goals, they end up assuming rapid transition to net zero goals. They assume rapid transition to economically efficient pathways where marginal costs are equilibrated. And it doesn't take much analysis to realize that the current nationally determined contributions, which is the vehicle by which the Paris Agreement is implemented, imply very, very different, costs for marginal abatement if everyone implements their NDC independently. Article 6 of the Paris Agreement allows countries to work together, and this is an important provision. But we don't allow double counting, and we do not allow countries to reduce their ambition. So analysis has shown that if we were able to get the full benefits of Article 6, in the near term, emissions, the cost of achieving NDC goals could be reduced by hundreds of billions of dollars, or if those emissions reduction cost benefits were plowed back into enhanced ambition, we can more than double the near-term ambition without any country experiencing any increase in costs over what it's committed to in independent implementation. In the long term, all nations need to have NDCs that are approaching zero, and so the scale of potential trades across international boundaries decline pretty dramatically. But ironically, or maybe even importantly, the value of emissions trades ultimately become much more valuable because as countries' emissions approach zero, the value of each transaction is rising exponentially. finally, there's many challenges to achieving the benefits of international cooperation, not the least of which is to understand how private transactions, that is, transactions where individual parties set individual commitments and privately commission with parties in other countries to achieve those private goals, and how they interact with the international transfer of mitigation obligations, the ITMOs. This is a place where there's relatively very little knowledge about how those things interact. How do we prevent hot air, and how do we ensure that land use change and nature-based solutions don't leak out into other parts of the world? Finally, in the long term, how do we encourage a system in which dynamic incentives are developed to increase ambition, because ultimately ambition needs to go to zero. And also we need to realize that nature-based solutions are a limited time offer, that ultimately any afforestation program, the forests grow to a steady state. And so in the long term, it's really about transforming the energy system. So there's a lot of challenges out there. That's a very rapid, high-level tour of some of them. But with that introduction, let me turn the floor back over to our chair.
Thank you very much. So obviously what you described goes way beyond the central bank perspective. It requires the cooperation of a lot of agents, but I think central banks still have a role to play, and maybe Jean, you can now present us a bit what have they already done, and how do they envisage their place in this context?
Yes, thank you, Pierre, and thank you very much for having me tonight. I will start with the obvious and perhaps build on the previous point. I mean, it's also important to realize that climate change is a global challenge, and as such, there is no solution that is not a global one. In fact, so you need to fix the problem everywhere to have it fixed, and that is begging for the three C's, I would say: cooperation, collaboration, and coordination. And that's what we have in mind in the NGFS. So maybe to take a step back, the NGFS is a network, the network for greening the financial sector. So it's a collaborative initiative initiated by 8 central banks and supervisors, and we are now 121 central banks and supervisors operating in about 90 jurisdictions and covering 85% of the world GDP and the world GHG emissions. So we have somehow a good coverage, but also a good understanding of the many challenges that comes with the transition, because we have people that see the transition from very different perspectives. And what we are trying to do is really to find ways to advance the climate action of central banks. Important to say that the way we understand it is within and because of our mandates, not despite and beyond. So it's really trying to make the idea of policy alignment real. So we are not substituting to any climate policy, but we want to make sure that what we do is consistent with and whenever possible conducing of the transition. So let me start with cooperation. That's clearly so. One of the first things that the NGFS did was actually to sit down and review what were the various supervisory practices already existing across the network. And I'm glad that Isabela is here, because what I remember is the discovering, or well, making it quite clear that some emerging economies like Brazil were in fact quite advanced in that field, already having started to implement supervisory approaches. Another case where I can see cooperation was around the idea of data. I mean, everybody is telling us that data gaps are the one big issue that's preventing climate action. So we tried to actually breach the data gaps that were used as an excuse for the lack of action. And it's quite clear that the cooperation in that field allowed us to cover a lot more than what any one of us could have covered. So that's the kind of the case for coming together. But beyond coming together, there is also working together, and that's something that I think is part of the DNA of the NGFS, as I would say. I mean, it was created in 2017, so 5 years ago, and 2 years after the Paris Agreement. And I think the main motivation of the institution that came together was the realization that there was a lot of things that would need to be need to be done, and for that there was a lot of prerequisites that I think was beyond the reach of an individual institution. And one such example, and it was already mentioned, is the NGFS scenarios. I think very early on we realized that if we want to understand the climate-related risks, we need to, or one way to look at it is to go for stress testing or scenario-based risk analysis. And for that to be done, you need scenarios. And when people started to look into the problem just after Paris, we all realized that there was a lot of climate scenarios, but there was actually no macro-financial climate scenarios. And we had to build that up. And in fact, it meant bringing together the kind of EIM types models, the macroeconomic modeling, financial modules, and so on. And that was something that, I mean, to give you an idea of the scale of what we are doing, so we are working with a consortium of academics. I don't know, but maybe it's about 30, 40 academics, maybe even more at times. That's on the academic side. And on the NGFS side, producing the scenarios typically would involve having 150 to 200 people reviewing Excel files to check the various time series and make sure that we understand what it means and so on and so forth. I mean, having 150 people looking at Excel files, I can assure you that even in the biggest central bank, it's something that you cannot do. So there was a clear case for working together. And then there is a case for coordination. So it's not just about coming together to work, but also to then afterwards to implement in a consistent way what we are doing. Again, stress testing is a case in point. If you want to have an understanding of this risk, obviously what you can do as a central bank is look at what's happening in your domestic economy, in your domestic financial sector. But obviously, you will learn a lot from being able to aggregate the various pictures from all of this exercise to get a global view of that. And to be able to do that, you need to have common references, basically. So maybe not exactly the same exercise, but at least you need to have exercises that can speak to one another. So that's a clear case for coordination. Another clear case for coordination is the supervisory and prudential approach to this risk. We are confronted with something that is fast emerging, and we can, all sit in our institutions, think about it, come up with slightly different solutions to the problem, and it will become an implementation nightmare for the financial sector, the global financial sector, because in fact, a lot of institutions would need to do somehow slightly different things to answer to what we expect them to do, and that would be very inefficient. Another example where I think there is a need for coordination is when we approach issues such as the G-Funds initiative, so the Glasgow Financial Alliance for Net Zero. I think it's much better that the supervisory or the official communities approach these initiatives in a consistent way, informed by some kind of common thinking, not necessarily doing exactly the same thing, but at least doing consistent things. And I said that we are starting from scratch, and that's another important aspect. I mean, if we are not able to be coordinated in addressing a problem that basically we are only seeing emerging, then I think if we fail that, I would have very, very little hope for any kind of financial coordination in our sector. Just to finish off, and perhaps more to the point, why it matters. I think it matters because, as you would have understand, I mean, there's an English say that says that alone you go faster and together you go further. I think in that case, what I can say is that it's really together that you go boost faster and further. That's quite clear. So you advance more efficiently. I think the second aspect where it matters more at a more fundamental level, it's a way to limit the transition risks. It's a way of having a common approach to greenwashing. Is clearly a way to limit greenwashing. I mean, if we start to have disconnected approach to that kind of issues, we will in fact increase the risk rather than reduce it. And in fact, when you think about it, most of the transition risk grew out of a lack of coordination or consistency between a number of actions. And finally, to conclude also, what we are doing is in fact more than the sum of its parts. I mean, for the past 5 years, we have each focused very much on our domestic activities, our domestic financial sector. But in fact, if you realize it, if you step back, look at it again, the transition is a global problem that needs not only to enable a transition at the domestic level, but also enable a global transition. So that implies a lot of typically cross-border investments. And that's something where only a good financial coordination only a good financial coordination can deliver. In fact, the financial coordination started in the 70s, clearly, I mean, because of these internationally active banks, and that's a case in point that we need more international active banking and financial institution, and precisely for that, it's clearly what we need more of today: coordination and collaboration.
Thank you very much for this overview of everything you do with the NGFS right now, and I think that actually the best forum to talk about international cooperation for central bank at the moment. Let me now turn to Isabela. As Jean said, the Banco do Brasil is one of was or is still one of the leader in terms of climate, taking into account climate change and environmental issues. You were very early in the game. What did you learn there? What can be transmitted somewhere else? Also, what is the perspective that on international cooperation that you see from big and emerging countries? How do you see these issues from your point of view?
Thank you, Pierre. Good afternoon. Good afternoon, James, Jean, and all the colleagues present in this panel. It's a pleasure to be here with you today. So it is widely known that tackling climate and environmental risks and the massive challenges that come with them demands close dialogue and a global answer. Values such as information sharing, coordination, and the promotion of a better understanding on environmental and climate-related issues are highly welcome, and international cooperation is a key factor to accelerate the discussions and actions toward a sustainable economy. The BCP has been following closely the rapid evolution of the environmental and climate agenda worldwide, and our strategic sustainability agenda is a dynamic instrument that today has initiatives organized in 6 distinct pillars: regulation, supervision, policies and instrument, partnership, research, and management. As Jean has already mentioned, This topic, it's not new for the Central Bank of Brazil. We have initiatives back to the year 2000s, but climate or sustainability, in a more broadly speaking today, is a bank-wide topic and a bank-wide endeavor with initiatives in almost every business unit. But on the benefit of time, I would like to highlight just 4 of these initiatives that were recently released. On the regulatory side, an important regulatory improvement was the creation of the Green Bureau, which provides the characterization of farmers with restrictions on access to the rural credit due to legal or infra-legal provisions relating to social, environmental, and climate-related issues. One of the expected results of the Green Bureau is to foster the conditions for a greener agriculture by bringing more information and transparency to the rural credit system, and at the same time to strengthen the compliance of environmental laws. The second one was a regulatory improvement that was in incorporation of the TCFD, the Task Force on Climate-Related Financial Disclosure, in the prudential framework of the financial institutions, with a broader scope in our case to the case that the disclosure will cover also social and environmental aspects besides climate. The third initiative refers to the publication of the Central Bank of Brazil first report on social, environmental, and climate-related risks and opportunity. Was another important milestone. With this annual report, the BCB aims to lead by example, to contribute to the global effort on information disclosure, and to reinforce its commitments toward transparency and accountability. And the fourth initiative is the BCB first climate risk evaluation exercise for the national financial system, which will be published next week. But even though that central banks and financial regulators have already done a great progress, there is a lot more to be done and understood in climate change, not only on the risk management perspective, but also exploring opportunities. Climate change as a risk factor is much different from the traditional financial risks. And the central banks need more research, more data, need to develop new instruments, to implement the necessary framework to avoid greenwashing, to integrate climate risk models into the existing frameworks of the central banks. Nevertheless, cooperation and coordination have been common practice among the central banks and are in the DNA of international organizations such as the BIS, the FSB, and the IMF. Through extensive dialogue and research, we will be able to level knowledge in the addition to mitigating data gaps towards a greener financial sector. But when we talk about climate change, it's impossible not to mention the NGFS. I know that Jean already mentioned that, but the efforts and publication of the network have been a great inspiration for the Central Bank of Brazil initiatives. There is no question that climate change poses a threat to long-term growth and prosperity. However, the transition also has its costs and impose heavy burdens, primarily to the emerging markets economy, developing economies, and low-income countries. Therefore, we should be aware to do not underestimate basic priorities affecting emerging market economy, especially the social impacts. Global investments to achieve the Paris Agreement requires immediate actions on climate policies, but policy should be accompanied by commensurate finance flows to close the large financing gap globally, particularly in emerging markets and developing economies. Another point worth mentioning, which Jean already highlighted, is the risk of duplication of effort due to coordination deficiencies. The topic has been debated in various forums, and coordination is needed to avoid duplication of efforts and better allocation of resources so that we can move forward more efficiently. Finally, we know that solutions to climate issues cannot be one size fits all. In this regard, regional cooperation has also a key role to play on translating global regulatory and methodological approach to local realities, considering regional specificities and offering policy guidance adapted to the region. So to sum up, the BCB has been working hard towards developing a long-term strategy and remaining at the frontier of knowledge in this agenda. And we recognize the immense value provided by international cooperation, either global, regional, or bilateral. Thank you. So I give you the floor back to you, Pierre.
Thank you very much. So let's open now the floor to debate. If you have any reaction to what has been said in this first introductory remark, also from you, James or Jean, if you want to react to anything that someone has said, please interrupt me whenever you want. Let me maybe start by a few themes that have been mentioned by you. So James, if you want to speak, you can go.
Well, I thought I would react to Jean's comments and I think reinforce a couple of things that he said, which I thought were really important. And that is that the NGFS has had an outsized impact on achieving Paris goals. And I think it has done that because it represents a group of central banks that have come together. They have developed scenarios for the purpose of stress testing, both by the banks and by the supervisors, that in turn have created an awareness that didn't exist prior to the coming together of the NGFS. Prior to the NGFS coming together and the development of scenarios for stress testing, as far as I could tell, there was close to zero interest in commercial banks and the private sector, maybe a little bit more in the private sector. But in commercial banking and large financial institutions, there's really very little interest in this notion of transition and physical risk, incorporating that into planning and portfolio analysis. And subsequent to the NGFS, you can really see coming together out there much more interest in this and what I think the NGFS has done is extended the forecast horizon for member banks and large financial institutions, as well as the private sector, and bringing on board this realization that their operations are going to have to go on in the face of both physical and transition risks that heretofore had not been incorporated. So I just wanted to emphasize that as a major accomplishment of the NGFS just in its first couple of years of existence.
I mean, so it's sure that the NGFS and through the NGFS, central banks have accumulated and developed a lot of knowledge. Now, moving, realizing the transition doesn't need knowledge, but it also needs actions. And we've seen a few central banks taking action recently, like the ECB, for example, announcing that they will reflect climate issues in their monetary policy operation. Do you think that there is also a need for cooperation between central banks once they start to implement policies, or do they learn from each other? And Isabela, you raised your hand before I asked this question, so if you want to answer something else or talk about something else, feel free.
I just would like to follow up on James' comments regarding the NGFS work. It's not for other reason that we have seen such an increase on the number of members. It started up with 8 central banks, and as John mentioned, today is more than 120. Not bringing the relevance to the topic, but also the consistency and the quality of the work that is delivered by the network. So the Central Bank of Brazil joined the NGFS back last year, and since the beginning of this year, we are part also of the steering committee, and we have representatives in all of the working streams and task force of the group, and it's a very hard and serious work that is done, and a lot of time consuming for the central bank. So as John has mentioned before, putting together that, no one could isolatedly have done that before. And the awareness that it has bring to the central banks is immense. Not in case of Brazil, we had already actions prior to discussion, as we have mentioned here, but since 2020, the sustainability became a strategic theme at the bank. So it gets another proportion in terms of initiatives, in terms of actions, in terms of how the topic is discussed internally. So this was my comments. And on Pierre's question, of course, I have no doubt that the feedbacks, and because this is something that is new for the central banks, so the feedbacks on the initiatives on any new policy that they try to, each central bank implements and can share with the other central banks is very relevant feedback, and we can learn from the lessons from these central banks and try to improve the measures from our side.
Jean?
Yes, thank you, Pierre. I kept on taking notes when each of the three of you spoke. Maybe to come back to James' point, mentioning that we have somehow tried and helped the financial sector to extend its horizon. I think that's true, but something else has happened in the meantime. It's also the case that the horizon or somehow, you may remember the famous speech of Mark Carney about the tragedy of the horizon. And I would say that if he were to make the same speech now, I think the right title may be now the tragedy on the horizon. I think climate change is also something that has become a lot more concrete in the past 5 years. So I think that it has worked both ways. I mean, we have maybe pushed a bit the financial sector to think ahead and think maybe 10, 15, 20 years from now, but also they are now confronted with the materialization of climate change. On your points on action and whether we need to, whether it stops with knowledge, you mentioned that a few central banks have taken action. I think it's not just a few, in fact. If I look across the network, I see, in fact, a lot of people seriously and consistently implementing their policies in that respect. And I think that's I can say it as a formal treasury people. I think that's the merit of central bankers to be very consistent in what they do. I mean, once you start to realize what you have in front of you, you start to clearly take it into account day after day, decision after decisions. And this is, in fact, what we are observing today. Stress testing, I think we have more than 40 institutions that have done, are doing, or are about to do stress testing. And I mean, you would have asked me 5 years ago whether in 5 years we would have 40 to 50 organizations around the globe doing stress testing. I would have, signed right on the spot for it. So I think action is not just the action of a few, and the NGFS is really not just about learning together, but equipping ourselves to be able to act, each and every one of us. I would also build on Isabela's comment. So there is this capacity building dimension in the cooperation. It's a way for all of us to learn and to climb the learning curve as fast as we can. But really, it's learning by doing. It's the work of the NGFS is not a place where you have the members coming and I'm not the head of the NGFS, but the head of the NGFS Secretariat. And in a lot of organizations, it's the Secretariat who is doing everything. In the case of the NGFS, it's really the members who come together to build up the things. And I think that's part of this capacity building dynamics that is so important, because you need to build capacity to then take action. But does it stop with knowledge? Certainly not. I think the more we are looking into the issues, the more we see new issues coming up. To take one example, last year around the COP26, we in fact realized that in thinking about the scenarios and thinking about stress testing, we had very much focused on energy issues, in fact, emissions related to burning fossil fuels, and took very little attention to things that are related to AFOLU, the change in land use, deforestation, and so on. So we realized that we were missing about a fifth of the problem that needs to be turned into we need to go from positive emissions to net negative emissions, because the net of net zero comes from net emissions, net negative emissions in this sector. And I think it was a collective realization around that. The same in the development that we are observing in the energy market these days. I think there is a collective learning. And this collective learning is not just about learning, it's also about adjusting our policy response in a consistent way. So I would expect and I would hope that the conversation goes on, not just because it's nice to discuss together, but in fact, it's a good way to keep on coordinating the action.
Thanks a lot. Let me throw in two different questions, and you can choose what you want to address. First, one question on regional hub. So Isabela, you said that regional hub could be useful. Since it's a global problem, how do regional hub address the issue of climate change? Is it the right way to do it? What would they bring? Should we extend this kind of climate clubs for central banks in some region? And the second is about macroprudential or prudential regulation in general. You mentioned, Jean, that this is an important area in which international cooperation is needed to have a kind of a level playing field and no holes where. Oh, you cannot hear me? Okay.
We can hear you, but it's not so good, Pierre.
Okay, so one question was about regional cooperation, regional hub, and the other about prudential regulation, where international cooperation is very important. And there, everything is done at the BIS level or the FSB level. And we know that these are platforms or places where it takes a lot of time to implement global regulations. So do we need another platform for prudential regulation, or how can we make sure that answers are delivered in time? Anyone wants to answer that?
Isabela, do you want to go first, or?
Yes, I can go first. Well, just to touch on the question about the regional cooperation. I do understand that it's quite important. Actually, just to give you two examples. So in the beginning of December, SEMLA joint with UNEP, are releasing the center, let me see the name correctly, is the Climate Financial Risk Center for Latin America and Caribbean. So the idea is that this is a hub where they will try to put together the regional central banks to share technology, to share knowledge, to come up with similar solutions. We do share same vulnerabilities, but also similar concerns in terms of social impacts of the transitions to the climate change. So the idea is try to take out some contributions that we may have from the global discussion and try to adapt, to tropicalize, or to introduce in our, considering the specificities of each country of the region. Also, there is a group of 7 institutions that are working together to construct or to propose a common basis for taxonomy for the Latin American countries and the Caribbean. Taxonomy is an important step towards the climate change because it's a classification system where it becomes more transparent what you consider sustainable or not, green or not. So it's important to avoid the greenwashing. And this group of institutions, they are trying to find a common basis that would be the starting point for the countries in the region. So it's to build a taxonomy. We know that Europe has gone through this process, was a very long process. It should be science-based. The idea is that it's harmonized with the international other initiatives like the European taxonomy, but it should also consider the characteristics or the priorities of each country when you start building your taxonomy. So these are 2 examples of regional cooperations that can boost the countries of the region to deliver faster what we should deliver in terms of climate change.
James or Jean, you want to answer?
Yeah, maybe to, one word on regional hubs and more onto prudential regulation and coordination there. I think it's indeed very important for all the reasons that Isabela mentioned, and this is happening. And I can say that from an NGFS perspective, it's really key partners. So we are working indeed with SEMLA, we are working with CSEM in Asia, and with others, because what we also what I discover day after day is that, in fact, the regional dimension of the transition are very different from one region to the other. And it's very important that you have these kind of places where some kind of complementary work can happen. So it's indeed extremely welcome. On prudential regulation, I would beg to differ with you on, it takes a lot of time. In fact, the BCBS has published its interpretation of the core principle of how climate change is taken into account in its core principle. And this is something that happened in a matter of less than 2 years, in fact. And I think it's indeed, from a BCBS perspective, quite a good achievement, or a fast one. And that's a case in point into highlighting the complementarity between the NGFS and the standard setting bodies. I mean, we are not a standard setting bodies, but we are a place where a lot of things can be incubated, digested, discussed, and so on. And if you discuss with the people that worked on these issues in the BCBS or in the FSB, and it's about the same in the FSB, the discussion benefits a lot of this kind of common bases that have been built through the NGFS. So I can say, I mean, just to say that I would not think that it will take a lot more years before, and actually it is already starting, before climate change starts to be one important element that is taken into account in supervisory activities and in the prudential approach of banks and insurance companies. What people may fail to realize is that we already have a lot of room for maneuver, or a lot of, I mean, we are speaking of a real financial risk, in fact. So you don't need to change the framework to take it into account. In some places, you may need to tweak things a bit to interpret or to find proxies, and there may be discussions about the right proxies to take, but in fact, it's a real risk, and it's there to be taken into account. And the fact that we have a place to, in fact, some kind of sandbox for the central banks to discuss these issues is very helpful when the discussion becomes a lot more policy-oriented at the international level.
So James first, and then Isabela.
Great, thank you. I want to just there are any number of ways I could take this conversation. I'll start with one of the simpler ones, and that is, as we've pointed out, the NGFS in developing these scenarios has raised awareness of the range of different pathways that the stability arms of the central banks may need to be dealing with, ranging all the way from largely around physical risk to largely around transition risk. And these scenarios have proved powerful. They've been deployed for stress testing. As we move forward, we want to increase the quality of those scenarios. And I think this is an opportunity for the NGFS members to get engaged. And I'll give you an example. We've been working with Banco de Mexico, and with regard to the scenarios that we produced in round 3 of the NGFS scenario program. And one of the things that we learned in this collaboration was that we weren't adequately in our scenarios taking into account some of the institutional constraints that exist in Mexico. And I'll just give one example because it's it makes it very clear that Pemex has an outsized role in policymaking. It is not just another oil company. It's run by the government, and so its interests as a corporate entity are taken on board when public policy is being made. Well, unless the scenarios have that knowledge, they're not going to be as useful as they could be. Every country that we model has a feature like that. And it's not the same feature in every country. It's that country's feature or features that need to be taken on board to raise the quality of the scenario development. And here's a place where cooperation could pay real dividends because the back and forth knowledge between the academic community and the people who have to deal with financial stability, can be a very useful collaborative engagement. So that's just one thing, and I'll leave the floor to others.
Thanks very much. So we're approaching the end of the hour, so we'll give you the word, Isabela, but maybe let me throw in the last topic. Isabela, you also mentioned the social aspect of climate change and the need for collaboration there. Is there something that central bank see or not? But Isabela, you wanted to answer also previous questions, so I'll let you the floor.
Yes, no, it was just one additional comment on regarding the regulation supervisory role of the central banks. In fact, we must keep in mind that we are dealing with a different aspect or a different animal, right? And so we are trying to understand it, and the common understanding or the best practice are still under discussion, still under constructions. But the FSB and the BIS, they have been working intensively on trying to understand not only how is the transmission of the climate risk to the financial parameters, but also how much does the current framework that we already have in place is able to capture these climate risks. So this is something that I would say that it's working, it's improving very fast, but it's not a simple thing. But there is a lot of intensive work being done in that matter. So moving to your question about social, coming from an emerging market country, we have so many social aspects, and climate is quite relevant. We have no question that, but the point is that we cannot forget about the social aspects. So the idea is that most of the implementations that we had, when I talked about the Green Bureau, when I talked about the TCFD, and even the report of the Central Bank of Brazil, we tend to have a broader view and to include also environmental and social aspects into it. So this, there are initiatives in this front when we talk about financial inclusion, financial education. We have also aspects related even to the payment system, the PIX. I don't know if you have heard about this, but it has made a huge difference for the population here in Brazil. So the social aspect is also something that is part of the Central Bank of Brazil agenda as well.
Yeah, I mean, we can go a bit over the hour. If you need to step out, please do. But the conversation is interesting, so maybe five more minutes would be useful.
Yes, if I may, something actually quite pressing, and also to answer one question in the Q&A, and to rebound on Isabela's point on the prudential framework. My suggestion was not that the prudential framework is perfect. It is not perfect. And typically one thing we need to improve on is the fact that our prudential framework is very much backward looking, and the problem we have to face needs a forward-looking approach. But it is already quite effective in approaching it. So we don't need to wait for these changes that may be complex changes. I mean, you don't change a framework from being backward-looking to being forward-looking in a matter of weeks. But you can start having quite an effective policy to address this risk. And that brings me to the question that was raised in the Q&A by Martin about the mandate. I think it's also important to realize, I mean, it goes without saying, but maybe it's better that I mention it. What we are doing as central banks and supervisor is clearly not a substitute to climate policies. Clearly not. I mean, to me, anyone arguing that central banks can solve the climate change problem are probably missing something. You need to have climate policies to address a central bank. But what we can do is a complement to any good climate policy. We can typically, I would say, accelerate and make these climate policies more effective by making sure that the financial sectors understand what they will come to face down the road. That being said, the typical mandate of central banks, and I mean, there are variations around that, so I would not speak for everyone, but clearly the two ideas, the two core parts of the mandates on price stability and financial stability I think it's also important to understand that they are, in fact, prerequisite to a successful transition. If we are not able to manage inflation, and I'm very conscious about where I stand and the current circumstances in saying that, but in fact, managing this making sure that we bring back price stability is clearly something that would be helpful, because I'm not quite sure that you can take investment decisions with a very long horizon, perhaps 15 to 20 years, if you have no idea that prices are being kept in check, and the same for financial stability. So I think it's also good in thinking about this question of climate change and central banks' mandate, to understand that it's really because of the mandate that we need to act. We are expected to deliver on this mandate to make the transition easier. And in fact, if all the pieces come together, we can even lean toward being more accommodative or being. But if you don't have the climate change policies, then I must say that perhaps we will need at some point to be more restrictive or more conservative, because we would have to manage the risk that would keep on increasing in the system.
I mean, this leads me to one question: to which extent central banks should also advocate for policy, for climate policy to the government. I mean, we have the example of the Central Bank of the Netherlands, if I remember well, that actively showed that a carbon tax would not be destructive for the economy in the Netherlands. So that's also might be a role in international cooperation that central banks can take, showing that it is good for everyone, including central banks themselves, to see the transition happening, because that would make the job of everyone easier. Unless someone wants to strongly object to what I just said, I think, okay, you can still not hear me well. Sorry about that. So I think it's still it's time to close this panel. Thank you very much to all of you for taking part of it. I just want you to remind you that we are having our next webinar on November 7. And what will be presented is the paper called Great Carbon Arbitrage by Isa Klein-Jewis. I'm not sure I pronounce the name well. And then we will start looking at policies in general, and not only monetary policies. Thank you very much. Sorry for the bad quality of my sound today, and I hope to see you in